Hello everyone. In this recording we're going to take a look at some of the homework problems in Chapter 5. Remember, the whole idea of Chapter 5 was to discuss a new method to allocate costs, the cost being the indirect overhead, to the individual jobs. This is called activity-based costing. And so this first homework problem is actually a little warm-up. We have a company here that actually provides tax consulting to multinational firms. In this firm, we have three professionals, three CPAs. We have Wilmer, and I'm over here in the data table. You can see I'm circling it. We have Wilmer, we have Boughton, and we have Odessa. There are two clients that they are billing. The first client is called Sacramento Dominion, and the second client is called Madrid Enterprises. And so the first data table gives us the number of hours that each professional is charging for each of the work jobs. And then over here in the upper right, we have their billing rates. You can see Mr. Wilmer. He must be the managing partner and the senior partner, because he is billing at the rate of $620 per hour. That's amazing. Alexandra Boughton, $190 per hour, and Jorge Odessa, $70 per hour. So in the first requirement, what we need to do is we need to figure out the amount of costs that we are going to bill to client. And basically in this setup with requirement 1, we are going to charge not only the hourly rate, but 30% premium on top of the hourly rate for the supporting costs, meaning the back-end administrative costs. So as an example, for Matthew Wilmer, I'm down here in the work solutions. Matthew's hourly rate, we said, was $620 per hour. Okay, and for Sacramento, Mr. Wilmer is charging 23 hours of work. So 620 times 23 equals 14,260. And on top of that, multiply it by 30%, and we're going to get the amount we should bill for supporting services. So if you add his billable rate of 14,260 and the support services of 4,278, you get 18,538. Same thing with Alexandra, $190 per hour. She worked 5 hours for this client, equals $950 times the 30%. That gives you the supporting services of $285 plus $950 equals $1,235. And you do the same thing with Jorge. His hourly rate times the number of hours he worked on the job equals the amount we should bill for his hourly rate times 30% will give you the amount billed for support services. Add it to his hourly rate equals the total amount billed. So we're going to bill out a total of $22,685 for Sacramento Dominion. We do the same thing with Madrid. Take the hourly rate times the number of hours they worked and mark up 30% for support services. So using this 30% markup rate, we would have charged $22,685 to Sacramento and $9,477 to Madrid, the second client. Now the second requirement is taking not only their hourly rate, which we calculated earlier. We can see that here, the 14,260, 950, and 2240 have the hourly rates. But on top of that, for support services, instead of taking 30% of the hourly rate, we're going to take a flat $50 times the number of hours worked. So when we do that, Matthew Wilmer, we're going to bill his hourly rate of $14,260 plus the support services hourly rate times 23, or $1150. Add the two up, we're going to bill $15,410. So using requirement 2, instead of billing Sacramento $22,685, using this support rate of $50, we would bill $20,450. And Madrid, instead of billing $9,477, using this second rate, we would bill them $10,290. So this is just a little exercise in showing you that based on changes to how we allocate different costs, we'll change the amount of the costs that are allocated to that particular job, and ultimately will affect the amount of revenue that we should bring in for every single job. So this is just a very simple exercise. It's a short way to show you that the allocation of costs as they differ, and as we break down each cost individually and come up with a new cost driver for how to allocate each individual cost, the closer we are to a better allocation of costs and a truer picture of how much it costs to run each job. In this case, is 30% premium or $50 per hour better? I don't know. That's something that we would need to analyze and figure out what is the best way to allocate supporting services. So once again, just a quick exercise to show you that there are indeed different ways to do this. Okay, in this next homework problem, we are going to see the difference. We're going to take one example, and I'm going to show you side by side the difference between using a simple costing system to allocate indirect overhead versus an ABC, activity-based costing system, where we drill down more specifically into our costs to come up with a better allocation. So we have a company here, PW, Parts World. They design and produce automotive parts. And in a particular year, their variable overhead totaled $317,250. And you can see basically the data table showing us the $317,250. That is broken down between design costs, engineering costs, and production costs. Now, with the simple allocation method, we are basically going to allocate the $317,250 of overhead. We will allocate it to our jobs based on total machine hours, and for that would be our predetermined overhead cost driver. And so if we take the $317,250, which is the overhead, divided by the total machine hours of 3,000, our predetermined overhead rate is $105.75 an hour. So utilizing the $105.75 an hour, we will multiply it by the number of machine hours used per client, per customer, so 105.75. So for our customer called State Motors, 90 machine hours is used. 105.75 times 90, we will allocate $9,518. For Aegean Motors, 105.75 times 2,000 machine hours, or 211,500. And Jupiter Auto, 105.75 times 910 hours equals 96,233. If you add these three numbers up, you will get your $317,250. This is a very simple way to allocate indirect variable overhead. This is acceptable when you have a very simplistic operation, but in today's manufacturing environment, it has become very complex. There's a lot of technology involved. There's a lot of processes involved. So what would be a better way to allocate the costs is, instead of coming up with one individual cost driver and one individual predetermined overhead rate, we want to break down, we want to drill down into our costs and see what type of costs we have and what are the better cost drivers for each type of cost. That brings us to requirement 2. So when we actually study our production, we come up with the fact that there are 3 different departments that the manufacturing goes through. First, we have a design department, and when we really think about it, the best cost driver for the design department is the CAD design hours. All right, and we know in the design department that we have spent $44,100 total. In the engineering department, the best way to allocate cost is based on engineering hours. Well, we spent $33,150 in the engineering department. And lastly, the production department, there we conclude that the best cost driver is the machine hours. And we spent $240,000 in the production department. So with requirement 2, what we are going to do is, instead of coming up with one predetermined overhead rate, in this example we're going to come up with 3, one for each department. So the design department, total overhead of $44,100 divided by, and if we add up the hours that we spent in design, 120 plus 210 plus 90, that gives us 420 hours spent in design. If you take 44,100 divided by 420, you get $105 per design hour. Production, as we said, we spent $33,150 divided by 390 engineering hours. That's the 80 plus the 50 plus the 260. You get $85 per engineering hour. And last but not least, that should say engineering here. It says production. That's a typo. And then the production, we spent $240,000 divided by 3,000 machine hours, which is the sum of the 90 plus the 2,000 plus the 910 among our 3 customers. That's $80 per machine hour. So what we will do is, for each client, we will use these 3 independent overhead rates to analyze a little different. So design for the customer called State Motors, there were 120 design hours times 105 is your rate. For engineering, we said the rate was, for engineering, we said the rate was 80. Okay, 80 times, well, this was production. Remember, production, it looks like there was a typo there. 90 times the $80 per machine hour. And then the engineering, we said, was $85 per engineering hour. So 85, if we look at engineering, how much did we spend? 80 hours for this client. So using our new allocation methods, which are basically breaking up our overhead into 3 separate departments, we would allocate $26,600 to State Motors. $26,600 to State Motors. You do the same thing for the other 2 customers. Okay, we have our AGN Motors, so we take our design hourly fee times the number of hours spent in each department. Well, we would allocate $186,300 for AGN Motors, and for Jupiter Auto, $104,350. Let's compare the 2. So using the single rate, how much did we allocate to State Motors? $9,518. Over here on the left, $9,518. But using the better method, where we drill down a little deeper into the cost, we should have allocated $26,600. We way undercosted State Motors. And you know what that means? That means our sales price to State Motors was probably a lot lower than it should have been. As a matter of fact, we might be losing money on State Motors because we were allocating costs in the wrong way. AGN Motors, we originally allocated $211,500 based on the simple method. We should be allocating $186,300. We were overcosting AGN Motors, which means we're probably charging them too much, and they are susceptible to leaving us for our competition. And then last but not least, Jupiter Auto. Using the simple method of allocation, we allocated $96,233, but we should have been allocating $104,350. In any event, it's the same $317,250. It is the same. We just simply need to allocate a little different by drilling down and coming up with better ways to allocate based on where the costs are coming from. Once again, and I keep sounding like a broken record, but it's a good way to learn, this is called activity-based costing. Okay, in this next problem, this is a really long but comprehensive problem. What we're going to do in this problem is we have a printing press. This company owns a printing press, and they have a whole bunch of costs to operate the printing press. Now, right now, what they're doing is they are actually using a simple method to allocate their indirect costs. So in the first requirement, it's very simple. Now, once again, I keep going back to the fact that there are 3 costs involved with the manufacturing process. That is, number 1, direct materials, number 2, direct labor, and number 3, indirect overhead, basically. We have our overhead, which is both direct and indirect, but the indirect piece is obviously the one that gives us the allocation headaches. So if we look at the data table given to us, and we can see it here, we have 2 types of jobs. We have a standard job and we have a special job. So first let's figure out our simple costing system, which is requirement 1. So we have our direct materials. So for the standard job, the direct materials is $150 per job, and the special is $240. The direct labor, standard job $210 per job, the special job is $230 per job. So we're going to put those numbers into the answer. Now the next question is, how do we allocate the indirect costs to each job? Now with a simple costing system, we are going to use one method to calculate for our basically allocate all of our indirect overhead. And so the author has also given to us in the data table, and it's a little bit further down here, you can see all of our indirect costs. As an example, cost of printing, $234,000, setup costs, $95,700, purchase order cost, $25,840. Anyway, the list is here. So we add up all of our indirect costs that were given to us. It came to a total of $530,440. And what we need to do is we need to take that $530,440 and we need to allocate that using one cost driver. All right, that's the whole idea of the simple method. Just use one cost driver to allocate all of the indirect costs. And so the best way to allocate the total indirect cost is based on machine hours. All right, and so the author told us, and let me come back here with the data table given. As an example, the standard job, there are 600 printing jobs, and each job takes 10 machine hours. The special job, we have 300 of them, and they also take the same 10 printing machine hours per job. So if you take 6,000 times 10, which is 6,000, plus, 600 times 10, which is 6,000, and 300 times 10, which is 3,000, the 6,000 and the 3,000 gives us a total of 9,000 machine hours. So if I take my total indirect cost of $530,440 divided by the 9,000 machine hours, that will give us $58.93.8 per machine hour. And if we take that rate, and we know each job takes 10 hours, every job we will allocate 10 times 58.93, or $589.38. And like I said earlier, that is the amount we will allocate to each individual job. That is a very simplistic method, but as you can see, the indirect costs are the largest out of all 3 of the costs that go into making the job, meaning the direct materials, the direct labor, and the indirect costs. So the indirect costs are very high a high number. Because it's such a high number, it makes sense to use an activity-based costing system. What we want to do is we want to drill down into these 6 different numbers: cost of printing machines, setup cost, PO cost, purchase order cost, design costs, marketing costs, administrative costs. 1, 2, 3, 4, 5, 6. So what we want to do is, instead of having one predetermined overhead rate to allocate the grand total of the $530,000, what we want to do is we want to build 6 different cost drivers, and we want to allocate costs individually for these 6 grand total numbers, and 6 total numbers instead of the grand total number with one cost driver. So let's take them one by one by one. First, we will work with the cost of printing machines. So the total for cost of printing machine operations is $234,000. So the best cost driver for the printing machine operations is the machine hours. And we said that the machine hours were 9,000 machine hours. All right? And so what we're going to do is we will take the $234,000, which is the total cost for machine operations, divided by the 9,000 machine hours. That will give us $26 per machine hour. That is the ABC, or the activity-based costing allocation rate for machine operations. All right, so let's dig into standard versus special. So let's take a look at the standard first. So the standard, let me come down here. Okay, the standard, if you remember, so we'll take that $26 per machine hour. If you remember, the standard had 6,000 machine hours. If you recall, that was the 600 jobs times 10 hours, machine hours per job. So $26 times 6,000, that gives you $156,000. So $156,000 for machine operations for the standard job. Now how about the special job? If you recall, well, 300 special jobs times 10 hours per job, 3,000 machine hours, times our new ABC allocation rate of 26, we will allocate $78,000 for machine operations. So that's the first one. The second cost was, let me come all the way back up here, setup costs, $95,700 total for setup costs. Well, let me show you the other data, and the best cost driver for setup costs are the basically the setups per hour. So setup hours per job. Standard is 3. The special is, what we got? 5. So standard, if we have 600 jobs and there are 3 setup hours per job, 600 times 3 is how much? That would be 1,800. So I'm going to come down here. 3 times 600 is 1,800. Now about special jobs. 5 number of setups for each job. There are 300 jobs. 5 times 300 is 1,500. It's a total of 3,300. So if I take my total dollar cost of $95,700 divided by the 3,300, which is the number of setups, that works out to, or setup hours I should say, that works out to $29 per setup hour. That $29 per setup hour we are going to use to break up our costs for the setups. Let me see. So we have the setups for the standard. Here we go, standard. There's your $29 per hour that we just calculated. And we said the standard had 1,800 setups. It's 600 jobs times 3 hours per job. That's $52,200. Okay, so that will be the allocation for the standard. And the special jobs, once again, we have with the special jobs, there's our $29 per setup hour. And we said that there were 300 jobs that took 5 setup hours, or a total of 1,500 setup hours. That's a total of $43,500 that we will allocate to the special job. Let's take a look at purchase orders. Okay, so we're done with machine operations. We're done with setups. Now let's allocate our costs using the ABC costing system. Now let's look at the purchase orders. So the purchase orders, what was the total? The grand total for purchase orders, coming back up, was $25,840. And what we want to do is we want to allocate the purchase order costs divided by the number of purchase orders themselves. And the author originally told us for the standard job, 330 purchase orders. For the special job, 430 purchase orders. If you add the 330 and the 430, what are you going to get? You're going to get 760. So if we take the $25,840, which is the total cost for the purchase order process, divided by 760 purchase orders, that works out to $34 per purchase order. And so we're going to take that $34 per purchase order, and the standard job was, if you recall, the standard job, $34 times 330 purchase orders, or $11,220, will be allocated to purchase order costs for standard. And then the special jobs, if we come down to the special jobs, there's your $34 allocation rate, and there were 430 purchase orders for the special jobs, or a total of $14,620. $14,620. Next, we will take a look at the administrative costs. So we said earlier in the table, and we got to come down here, the administrative costs, and hard to see, but the administrative costs came to a total of $81,900. And based on the table, it says that administrative costs will increase with direct labor costs. So the direct labor is going to help us allocate. That's going to be the cost drivers for the administrative costs of $81,900. So earlier we said that the direct labor cost came to a total of $126,000 for standard, $69,000 for special job. If you add the two up, it came to $195,000. So if we take our administrative total of $81,900 divided by our total labor cost of $195,000, that works out to an allocation rate of 42 cents per direct labor cost. So 42 cents times 126,000, that should give us our administrative of $52,920. Let me just do the math now. 42 cents times $126,000. Yep, that's the $52,920. And then for the special job, the 42 cents times $69,000. That'll give us $28,980. Okay, so that's administrative costs. And we're breaking that down once again between our two jobs. Next is design costs. Well, the author just flat out gave us the design costs between standard and special, $14,000 and $37,000. That was actually given to us in the original data table. We can see the design costs were actually broken out for us. So there's nothing we really need to do. And clearly this is the best allocation method. This is more of a direct cost. So it's real easy to allocate between the two types of jobs. And last but not least, marketing. Marketing is 4% of revenue. That is basically our cost driver. And so first, for the standard job, there's $1,100 is our price per job, $1,100 per job times 600. If you take 1100 times 600, that'll give you $660,000. And if you take that and you multiply it by 4%, you will get your 26,400. And for the special job, we said that the price per job is how much? 1,300. So if we take 1,300, multiply it by 300 jobs, that's $390,000 times 4%. That'll give you the 15,600. All right, so you can see that when we allocate using an activity-based costing system, the cost of each job for the standard job, $881.23, the special job, $1195.67. Let's compare that to the original. What did we do? The standard job, we said $949.38 compared to $881.23. We were overcosting. And the special job, originally, $1,059, using an activity-based costing, $1195. We were undercosting. So the standard job, we were overcosting. The special job, we were undercosting. This makes a huge deal in all sorts of management decisions, including, even more than this, but including how much we decide to price our inventory to our customers when they buy it. And this last homework problem is more of the same. We basically have a supermarket here, and they are trying to figure out their operating income broken down by product line. And basically what we have here is we have baked goods, milk and fruit juice, and frozen products. And so what we are going to do is we are going to use two methods. First, we're going to take a simple method to allocate our indirect costs, and then we're going to expand that into an activity-based costing system. So first, let's take the simple method. Revenues right across the board. The author gave us these numbers. $57,500 for the baked goods, $63,500 for the milk and fruit juice, and the frozen products, $51,500. That's the revenue. And then our direct costs, our direct cost of goods sold, that's going to include the direct materials as well as the direct labor. $39,000 for baked goods, $46,000 for milk and fruit juice, and $33,000 for the frozen products. All right, author gave us that information. And using a simple costing method, here's the allocation of our indirect costs called store support. $11,700 for baked goods, $13,800 for milk and fruit juice, and frozen products, $9,900. But what we want to do is we know that our store support really digs down and breaks down into 4 different activity areas. And that is number 1, ordering, number 2, delivery, and number 3, shelf stocking, and number 4, customer support and assistance. And so what we want to do is we want to use an activity-based costing system to better allocate our store support. And so what we're going to do is we're going to gather information. As an example, ordering for baked goods, we know that we spent 20 purchase we did 20 purchase orders with baked goods. And based on our activity-based costing analysis, it comes to $104 per purchase order. That number was given to us. If we take the 104 times the 20, we will get our ordering for baked goods, or 2,080. How about delivery? 100 deliveries times $82 per delivery, $8,200. Shelf stocking, number of hours for baked goods, 195 hours. Based on our analysis up here, upper right, $18 per hour. If you do the math, 195 times 18, 3,510. And lastly, customer support, 15,500 items were sold. And based on our analysis, 24 cents per item sold should be allocated to customer support, $3,720. You do the same thing with milk and fruit juice and frozen products. You take the statistics for ordering, delivering, shelf stocking, and customer support and multiply it by the predetermined rates. You can see our operating income is still $19,100, all right, between the costing system, simple costing system, and activity-based costing system. The difference is how we allocate our indirect costs. So baked goods, using a simple method, the operating income was $6,800. But using an activity-based costing system, it's only $990. Wow, we were way off there. We were over costing our baked goods. Okay, so we certainly, we were under costing. We were under costing our baked goods. So when we do an allocation, we can see a lot more costs are being allocated using activity-based costing. We were under costing, indeed. Okay, how about milk and fruit juice? The operating income was $3,700. Now it's $4,950. So we were clearly over costing. Frozen products, we had operating income of $8,600. Using activity-based costing, the operating income is higher. All right, so with frozen products, we were over costing as well. So this is something to keep in mind. Bottom line is this: the more and more you can drill down into understanding how the individual indirect costs are driven, and we can allocate in a better method. This is called activity-based costing.